Hey everybody, Gary with Basecamp Trading. Take a look at a couple of bearish setups that we had in crude today. You see in the overnight session, pushed up a little bit and then kind of went sideways. Made a double top right here. You can see left this topping tail, consolidated, tried to push back up, left another big topping tail and a shooting star. The body of this bar was all selling. So you left the topping tail and the body was all selling. Sellers were firmly in control when this bar closed. The crude pit opened, the old ghost pit opened on this bar right here. Pushed up a little bit and then pushed all the way down. Hit the 50 EMA, actually closed underneath it. I mean, the whole body of this bar was all selling. Opened right here, pushed up a little, left topping tail. Whole body was all selling. Closed underneath the 50 EMA. And then did what price always seems to want to do when it's near the 50. It hits it, tried to go above it, ended up closing below it. Went back up, tried to go above it again, ended up closing below it. Went back up, tried to close above, tried to push above it again, ended up closing back down. And this one closed all the way down here, set up the bear flag. I'm sorry, closed right here, set up the bear flag. The next bar was a very bearish bar, opened right at the top and then just continued to push right on down, triggered in the bear flag, and then caught a nice move to the downside in crude. Actually trading that off the Unarenko chart. And then right in here was where that consolidation took place. The bar pushed up a little bit and then triggered that bear flag to the downside right here. Depending on how you traded this, again, you know, nobody's picking tops and bottoms, but typically you get this many bars in a row that are extended on Trender Pro 2.0. You'd be looking to exit on the first reversal bar or take targets. You know, depending on how you traded that, you actually had the potential to get a little more than $600 per contract out of that. If you took the close of the bar, it ended up around $500 per contract. Then we pulled back, made a nice momentum reset. You can see the fast and slow line pulled back close to the zero line. Fast line actually made a zero line touch, triggered a wick off the 34, and another nice push to the downside. We were forming divergence right here. Typically, we form divergence, would be looking to take the first reversal bar off. So again, depending on how you manage your trade, should have been able to grab another $300 off on this push to the downside. So potentially $500 or $600 on this trade, potentially $300 or more on this trade. Again, just depending on how you're managing it. You had the bullish divergence. You wouldn't be taking this wick off the 18 for the same reason. Bullish divergence, momentum was going up, not down. You needed a momentum reset. You may or may not have taken this wick off the 34 right here. Crude was extended at this point, but you did get a pretty decent momentum reset. So possibly you took this wick off the 34. That would have been good for a couple $100 per contract if you had. Don't know if you'd be trading that or not. Again, we were getting extended to the downside at that point. But a couple of nice bearish trades in crude with 30-minute confirmation.